Hello and welcome to the tutorial. This tutorial will be talking about the four tradable instruments, and we will be doing an introduction to fundamental analysis. So the four tradable instruments: we can trade bonds, forex, commodities, or equities. So a bond is a debt instrument. So we can purchase a bond off a government or a corporation, and we will be paid out a yield. So our bond is a low risk asset class, and we can buy a bond from anything from 3 months up to 30 years. So a bond again is a debt instrument, and it's a low risk investment. We have a forex, which is trading currencies, which would be classed as a high risk investment. Very specialist type of trading. Forex trader will typically trade the major currency pairs such as the US dollar against the Japanese yen, sterling against the US dollar against the Canadian dollar, and so on and so forth. And that is our forex pairs. We also have a commodities, which includes oil, gold, natural gas, and silver. And these can be all traded. And then we have our equity markets, which include both the indices and individual companies. So an index would be the Dow Jones 30, the Nasdaq 100, or the S&P 500. And within these, we have individual companies that can be also traded, such as Apple, Coca-Cola, Microsoft, and so on and so forth. So as a trader, you want to first of all plan what you are looking to trade, and that will come down to what type of trader are you. If you're a full-time trader and you can give all your time and attention to the markets, well, maybe you can look at forex or trading the indices. If you're a part-time trader or you have a full-time job, you might want to look at a lower risk asset class such as a bond, and that will be a lower risk trade. But again, if you're trading full-time, part-time, the main thing is to be comfortable with what you are trading. So just be aware of the four main asset classes: bonds, forex, commodities, and equities. So on this tutorial, we'll be also discussing fundamental analysis. And this is the data that you will be using to get the information to place your trades. So we have both fundamental and technical analysis. So today we'll be dealing with fundamental analysis. And one of the first places you'll be getting your fundamental analysis will be on your economic calendar. And there's various websites we can visit to get this data. There's FX Empire, there's FX Street, but today we look at investing.com. And again, the economic calendar will be the same on all of these websites, but it will be a breakdown of the daily events that are happening that will impact all markets. So they cover all markets, not just your forex or not just your equities, and it will cover all global markets too. So our economic calendar today gives us all our events, and this will help us plan our trade for the day. So we're looking at 24 hours worth of information here, from your Japanese news down to your Swiss news and your US dollar. And each of these little bullheads here, that will represent how important the news is. So one bullhead here means that the news isn't so important, but 2 and 3 will be news that will really move the market, such as the USD core durable goods orders. Okay, and it will depend on the country too. If there was news from the US or China, these are major markets and they will be major market movers. So be aware before you place any trade that you have an idea of what news is coming out. So your homework is done before the markets are open. You have your fundamental data in front of you, and this is all here for the whole week. So you can plan the week ahead and you have all your data there. And there's some big events you want to look at. In Europe, for instance, if the ECB have an announcement, you'll have the president of the ECB, Mario Draghi. If he's speaking, you want to be aware when he's speaking and what he's speaking about. He will be a market mover, okay, head of the ECB. And in the US, down here at 17:30, we have FOMC, the Federal Reserve member, Stanley Fischer, is talking. So if someone from the Federal Reserve, the FOMC, is speaking, you will want to take notice. And again, it doesn't matter which market you're trading. When the big central banks are speaking, you want to be aware of when they are speaking and to take this into account before you plan your trade. So again, this will be your fundamental analysis and planning your trade using fundamental analysis. Now, we will teach an intermarket analysis, which will be combining fundamentals and technicals. So again, this is just a brief introduction to your fundamentals, and fundamentals will cover all markets, whether you're trading your equities, your commodities, your forex, or your bonds. And we have all the data here for us. You're looking for your data forecast, and you're looking for the actual figure that will come out. So this will impact whatever trade you have on at the time. And again, we look at the major market movers like Japan, US, and Europe, and so on and so forth. So again, ECB and Federal Reserve, would be the big movers. So some days will be busier than others. Today was quite a busy day, and there's a lot of news. So again, your market's going to be moving up and down with this news. So we trade technically and we trade fundamentally. So again, fundamentals is the data that is coming out that will affect the markets. It will affect inflation and deflation, and it will affect the prices across all asset classes. So be aware of your fundamental data and where to get this data and implement it into your trading plan. So this is a brief introduction to fundamental analysis. Again, we'll be doing further tutorials, and we'll be delving deeper into different asset classes and how your fundamental data will become part of your plan and how to trade off it on an intraday and longer term basis. So thank you very much for listening to our tutorial, and I hope to speak to you soon. Thank you very much. Goodbye.